Hello, Namaste, and welcome back to my channel. This is Neeraj Shah, and my channel is Financial Market and Neeraj Shah, Stock Analyst. So, in today's video, I just wanted to give you some little bit a review analysis of what's the events, upcoming events in the world and in India. So, we have, that in USA, CPI numbers, that is inflation numbers, consumer price inflation numbers, retail inflation numbers, and in India already today, central bank, Reserve Bank of India came out with the CPI inflation numbers, and which was 5 points inflation. So it is supposed to be a positive, but here is the catch. As you know that India 5.72%. So Indian market or be it any other market in the world or be it any other central bank in the world cannot independently increase or decrease rates. It has to be in tandem, or what do you call it, in synchronization with the US Fed, because US Fed is the biggest central bank in the world, right? And all this financing basically it's set, the tone is set by the US Fed, because if US Fed keeps on increasing, suppose say USA and Indian central bank doesn't increase the rate, then what will happen is that money, the interest rate which will an investor or a depositor will get in USA bank, which will be higher, or if you say the purchasing power parity, it will be much more beneficial to invest in USA rather than invest in India, because if Indian central bank RBI doesn't increase the interest rates in tandem with the US Fed, so that gap between the interest rates earned by an investor increases. So that is where the money will flow towards the USA and not towards India, because if the inflation remains high and still your interest rate has not increased, so basically in India if you will invest, then your real income will come down, because real income is what? Real income is the nominal income minus inflation. So nominal interest rate minus inflation. So that way it will be actually in the negative territory if Reserve Bank of India doesn't increase. So we should not be too much of cheerful about the Reserve Bank of India's or India's CPI numbers, because everything at the end of the day depends on the US CPI numbers and how the US behaves in the generally. And also we have few results season has started, as quarterly result seasons, and we have had a few results from the tech giants like TCS and Infosys, and those results have come, you can say, good in expectation with the line as far as the top line is concerned, growth is concerned. But as I keep on telling is that what is the result is just behind this December quarter results. Now we have to look at that, how the things are going to pan out in the next quarter and the next few quarters. Because see, even if you earn the deal size, suppose, because deal size is you keep on accumulating these orders over a period of time, right? But if the situation, because most of the Indian companies, Indian IT companies, technology companies are catering to the Europe and the American companies as a as a consultant and as a service provider. So if that Europe and America slows down, then definitely the deal size for these companies also will more or less, in a way, if it doesn't collapse, but it will slow down also. So that is where the catch is, that we will not be able to see the good numbers should be used, in short, should be used as an opportunity to sell rather than to buy into the future. So any results come, and if it is come with the good number results, then that on the good positive sentiment, if the market goes up, it's better to sell in the rising market rather than the buy. Okay, and also we have had this kind of, some of the banks results will be coming in this week and the next week, and the metals, steel and aluminum big companies results will be coming. So that way it will set the tone for the market, and particularly the sector wise also we will get a sense as to where the market is heading towards. So this is in nutshell. I just wanted to give a review about that, what is the result and how one should look at the result season. And how one should look at even that India's inflation number CPI, which has come today only. So it all depends on the US inflation number, as I keep telling. So we have to wait for that. If the US inflation number comes below expectation, then you can see a market rally in the next few days, till the time actually the Fed meeting, which is going to happen on the 1st of February. So before that the Fed meeting is not there. So before that you may see a short term then rally if the inflation number of USA comes less than, or even if that that kind of declining trend it is happening. So before if I end this video, I just request all of you, please subscribe to my channel if you have not yet subscribed, and also you please visit my website www.statedanalyst.com. all the blogs and all the whatever the lectures or whatever the posts and videos I come out with, all the detailed analysis in the writing is it's there. And also for any personalized investment advisory, it's on chargeable basis. You can find that information also on my website. And so that is what I just wanted to share my thoughts with you. That's it, and ciao from Neeraj. See you next week.